All right, everybody. I'm going to go through a very simple analysis that includes and incorporates the concepts of liquidity, inefficiency, efficiency, right? And fair value. Okay, so it's going to be really simple. And if you use the same concepts, you can determine where price is going to go with a pretty darn high degree of certainty. Okay, so let's see what happened, and let's just quickly go through what happened in price in 2024. I'm on the monthly chart right now, just to give you an idea of how price utilizes liquidity and inefficiencies. Inefficiencies can be seen in terms of a expansion in price, a displacement where price moves quickly in either direction and leaves a gap basically between candles. In ICT concepts, it's called a fair value gap or liquidity void. Let me just create one here. As you can see, one was created during this displacement, and that's usually a magnet on price. As you can see, price actually comes down all the way to the fills that inefficiency. Why does that happen? Because let's say you have a computer, a PC at home, or a car, let's say a machine. If it's not efficient, it's going to eventually burn out and stop working. And as you can see, the market is always working, right? It hasn't stopped because it is efficient. Price can keep going in a specific direction because it is efficient. You may see some stocks or markets that may seem to just be continually going up. Um, this may happen on longer term trends, such as maybe gold, if you're going back like dozens of years, or the S&P, um, which are fundamentally driven to continually increase in price, usually increase in price, right? But if you go to lower time frames, at a certain points, you'll find that price tends to come back to its inefficiencies to offer fair value as well as to seek liquidity. So let's have a look. We had the inefficiency created here. Price consolidates around this area. Basically, you could say smart money is accumulating their positions because it may take time to get into positions as you have to rely on liquidity. If you're a big player, you need time for other people to take the opposite side of your trade because that's trading, a zero sum game. Okay. But you can see it come back to this area. And removing that fair value gap, I want to take your attention to the inducement of liquidity and the rating of the sweeping of liquidity as well. So as you know, traders use concepts such as trend lines for support and resistance. Like the market really finds support or resistance at this level. Yes, in the sense of being a self-fulfilling prophecy. If everybody is buying at these levels, it supports price. Or selling at these levels, it resists price. I wouldn't say resist, but it builds up liquidity at these areas. There are orders to go long or short at both levels, whether it's on top or below the market price. So let's look at this trend line here. Okay, we're on the monthly chart, but if you go to the lower time frame, you're going to see like more candles and it's going to be a little bit more obvious. But you see a trend line being created with 1, 2, 3 touches. It goes back to the median point and then it pierces it. Okay, on this candle, On this monthly candle, we see a rejection there. Okay, but on lower time frames, let's just go to the weekly maybe. Fast rejections, go to the daily. Also, relatively fast rejection from this area. Just to point, there's also equal lows here, which is often seen as support. Okay, little bit in relation to this entire thing, but nonetheless, some nice equal lows there, which we're taking. Okay, so at this point, this break of this trend line, traders may have been expecting to go short at the break, thinking Bitcoin's doomed, it's going back to nothing. Let's target something else, right? And we do get a bounce. Those people out, and doesn't matter where their stop loss is, they are out. They are out, out, out. If they were leveraged, right? If they are, if you're going short, you know usually leveraged. If it was very little leverage, then they're obviously still stuck in their position at a drawdown. And there's traders who were going long. Maybe they went long here. And what are they going to want to target? Highs and lows, usually. Where are they going to put their stop? Usually at a low. Doesn't matter where they got in. They're usually putting their stops at this level here, which was pierced at this trend line. Maybe they put it at a trend line level. When price comes here, maybe they get in at those levels. Maybe they get in trying to get in around here, but they get stopped out. All sorts of things. General idea, there's liquidity here. Okay, some traders win, most don't. Smart money usually takes the positions of people on the wrong side because smart money is usually on the right side, right? And they have a lot of capital. So naturally, there's a lot of capital on the wrong side. Okay, but some people win, and some people lose. Some people win at different times, and maybe they lose. Some people lose, and maybe they win at different times. Okay, topic for another day. But basically, yeah. Okay, we consolidate, and we start expanding. Accumulation is done. The last piece of the liquidity was rated. That manipulation, this big drop down, getting traders thinking that, oh, we're going downtown. But we see the trend line here as well created. Look, just to make it a bit more precise. This is near touch. Again, also near touch and near. So it's a pretty perfect trend line. Come near the top and we drop down. Okay, consolidate. We test it one time. Revisit some inefficiencies here. This is probably an inefficiency, more of an inefficiency on another time frame, like a fair value gap. But you see the displacement, and we return here. If I put on a fib just from this level, you can see we come back down to what I like to call fair value or equilibrium, or what ICT calls. So it usually comes back down to 50%. So traders can get in the market, traders can get out of the market. All right. So in a sense, that relates to efficiency of the market as well. We expand up, and look at this. We kind of break that on this time frame anyway. We break down. Maybe people think we may be going lower. I don't know. Just liquidity trades are happening at this area because of this trend line, and there may be other considerations as well. Okay, other kind of let's say these equal highs. People may see it as resistance. It breaks out. It closes above. People are going long. Oh no! So you can see how liquidity is, how trades action is happening at these levels. Let's go back to the monthly. Okay, that's an example. One more example of coming back to fair value is this low to this high. We come back to 50%. And what else do we come back to? An inefficiency. Over here. Fair enough, from here to here. It happens, okay? And based on the time frame that it happens, based on this monthly time frame, this is a large displacement with a large void. And it comes and gets filled. Was too quick. Not many traders had the chance relative to this time frame to get in their positions compared to 1, 2, 3, 4, 5, 6, 7, 8 candles here this move happened in like 1, 2 candles. Relative to this whole thing, this is inefficient. Okay. So we come back to it. I'm sure some manipulations happening. We come pretty much almost all the way here, and then we expand back up. UPDD. And now we've made quite new highs. 1, 2, one more time, and we're still closing lower, and now we're pushing down. So where would we likely go? To the other side of price to seek liquidity or be efficient, okay, to make an efficient market. What else do I notice? Remove this first. Move this there. A trend line forming. What is at a trend line? Liquidity. Okay, liquidity is going to happen here. There may be a sharp bounce, but it's going to be taken out. I'm sure if it bounces here hard, however hard, I think it's going to come back down and take that out as well. Okay, that's what it does. Liquidity is there, and this is quite high up. We're quite high up. It's fair to assume that it's not going to take too much to want to hunt that liquidity. What else do we have on this time frame? An inefficiency here, which was not yet traded to. It's so close to here, and now we have somewhat of equal lows, which is seen as support, which is liquidity. There's liquidity being generated there. There's action that wants to happen around these levels. Okay, positions are building up. And what else? The final tool, the Fibonacci, or any other tool where you can see the midpoint, 50%. Okay, so we have come down to 50%, but we have not taken out this low. We have retested this high over here, but I feel like this wants to be retested unless for some reason on, perhaps this is the USDT chart, perhaps on the futures chart. It's always worth looking at the futures chart and other USD charts from other brokers to get an idea. Are there any like hidden gaps or opening gaps, liquidity voids? How far did price move on those assets, on those pairs, right? So it's always good to look at those. But I feel like we're going to come back lower, at least into this level, which is 98, at least to that level. So as a short target, great. And perhaps even lower into near the 62. We could come to the low end at 95. We could come into the golden ratio number, 94. Let's have a look at other time frames. As you can see, there's a 2-month gap here that we're already in. Tapped once, tapped twice. It's the 3-month. No gap there on the 3-month, but we have wicks. Gap down here on the 4-month. But if we do move that low, yeah, it's kind of worrying. We made it go that fast. Who knows? Okay, on the 3 weeks, we had a gap that was. We had a move the Fibonacci. We had a gap here that was traded into once already. But as you can see, let's go down to like the weekly. You can see the kind of structure on the weekly. We took liquidity here. So where would we likely want to go? We would likely want to see liquidity on the other side, right? This was a manipulation. Boom, big green candle, and then boom, boom, and it's likely going to push lower based on the type of action that we had here, the type of waves. 1, 2, a lot of consolidation. So with some strength, it's likely want to push lower, and there's a nice gap down here as well. Okay, I see us at least wanting to come down there. I would say like 90K, somewhere around there might be quite interesting, if not lower, but I'm not going to make that sort of prediction. Yeah, so that's it for this video. I hope you found it useful, and go see for yourself how this is the truth of how price moves. Till next time, see you later.